If you are a freelancer and you are not going to be ready to file your tax return by April 15th, you have an option: file a tax extension. And contrary to what most people think, a tax extension is completely normal, extremely common, and not a red flag with the IRS. Millions of Americans file extensions every year, including a huge percentage of self-employed people and small business owners. But here is the critical thing most people get wrong about extensions. An extension gives you more time to file your return. It does not give you more time to pay the taxes you owe. That distinction is everything, and getting it wrong costs people real money in penalties and interest. Let me break down exactly how the tax extension process works for freelancers in 2026. The form you need is Form 4868, Application for Automatic Extension of Time, to file U.S. Individual Income Tax Return. You file it by April 15, 2026, and it automatically extends your filing deadline to October 15, 2026. 6 extra months to get your paperwork together, gather all your documents, and complete your return. No explanation required. The IRS grants this automatically when you file on time. Sole proprietors and single-member LLC owners file the same Form 4868 that any individual taxpayer files. You do not need a separate business extension form. Your Schedule C is part of your personal return, and one Form 4868 covers everything. Filing. Form 4868 is simple. You can file it electronically through IRS Free File, tax software like TurboTax or TaxAct, or through a tax professional. You can also mail it. Just be sure it is postmarked or e-filed by April 15th. If you e-file, you get a confirmation number. Keep that. Now here is the part that matters most. When you file Form 4868, you are estimating what you owe and submitting any remaining payment at that time. The form has a field for estimated tax liability, what you have already paid in quarterly estimated payments, and the balance due. Whatever you owe, your best estimate, needs to be paid by April 15th, even if your return is not filed until October. If you owe money and you do not pay it by April 15th, the IRS starts charging interest and a late payment penalty immediately. The late payment penalty is 0.5% per month on the unpaid balance, up to a maximum of 25%. Interest accrues from April 15th at the current IRS underpayment rate, which has been running at around 8% in recent years. These charges accumulate every month until you pay. Here is the good news. The late filing penalty is much more expensive than the late payment penalty. The failure to file penalty is 5% per month on the unpaid taxes, also maxing out at 25%. By filing an extension on time, even without paying everything you owe, you eliminate the failure to file penalty. You will still owe interest and the 0.5% monthly late payment penalty on any balance not paid by April 15th, but you avoid the 5% monthly failure to file penalty. That is a meaningful savings if you are short on cash in April. The practical takeaway: always file an extension if you cannot complete your return by April 15th. Even if you cannot pay, file the extension. The consequences of not filing are far worse than the consequences of not paying. Now, quarterly estimated taxes. This is a separate obligation that continues regardless of whether you file an extension. Your quarterly estimated tax payments for 2026 are due on their normal schedule: April 15th, June 15th, September 15th, and January 15th, 2027. Filing a Form 4868 extension does not change these due dates. Do not confuse the extension deadline with the quarterly payment deadlines. Here is another important distinction for freelancers and self-employed people: contributions to your retirement accounts. Filing an extension does not extend the deadline to make a prior year contribution to a traditional IRA or Roth IRA. The IRA contribution deadline for the 2025 tax year is April 15th, 2026 period. An extension does not move it. However, filing an extension does extend the deadline to make a prior year SEP IRA contribution. If you file your return by October 15th with the extension, you can make your SEP IRA contribution for the prior tax year up to that October 15th extended deadline. This is a meaningful benefit for self-employed people who have not yet determined their exact net income. You can wait until your return is complete to calculate and fund your SEP IRA. Solo 401k contributions work differently. The employee deferral portion must be elected by December 31st of the tax year. But the employer profit-sharing contribution can be made up to the extended filing deadline with an extension. So, solo 401k users should be aware of which contribution type they are making and when. What should you do if you file an extension and realize in August or September that you owe significantly more than you paid in April? You can make an additional payment at any time before October 15th. Go to irs.gov, use the direct pay system, and submit the payment. This stops additional interest from accruing on the amount you pay. Let me give you a practical example. You are a freelance photographer. Tax season arrives and you are still waiting on some client documents and receipts. You estimate you will owe $8,000 in federal taxes for 2025. You have already paid $6,500 in quarterly estimated payments during the year. You owe an estimated $1,500 balance. What you do? File Form 4/8 and 6/8 by April 15th. Pay $1,500 along with the extension, your best estimate of what you owe. Your filing deadline is now October 15th. By September, you have all your documents, you prepare your return, and you discover you actually owe $1,800, $300 more than you paid. You pay the additional $300 when you file in September, plus a small interest charge on the $300 for the months it was late. Total extra cost, minimal. Paperwork, now complete with no rush. If instead you had done nothing, no extension, no payment by April 15th, you would face both the failure to file penalty, 5% per month, and the failure to pay penalty, 0.5% per month, plus interest on the full unpaid balance. The cost adds up quickly. The extension process exists to help you. Use it when you need it. File it on time. Pay your best estimate of what you owe. And do not confuse it with permission to delay paying your taxes. Subscribe for more tax clarity for freelancers. See you in the next one.